In this presentation, we will be working a problem related to the first in, first out, or FIFO flow assumption. For more accounting information and accounting courses, visit our website at accountinginstruction.info. We will be doing this using a periodic system rather than a perpetual system. So we're going to use this data set on the left side. We're going to put that into this worksheet, and noting once again that we are on a periodic system. Once we enter the data here, we're going to then post it to our journal entry and show the effect on the trial balance so that we can see what is happening, tie this inventory problem into what happens on the actual data in terms of the accounts with relation to the trial balance here. So our trial balance is in balance. We're going to post our entries as we go, as we make purchases and sales, to the entries column and see what the ending balance is. Once we get to the ending balance, we should always be tying out then to our worksheet. You can see here that we have a beginning balance in inventory of 5,000. So here is our inventory account. This is where our major focus will be. This is what we will be dealing with, purchase and sale of inventory with relation to a periodic FIFO first in, first out assumption. We then have the cost of goods sold. That's going to be the other key area we will be focusing in on as we work this problem. So first we're going to say that there's a beginning inventory of 100 units at a cost per unit of $50. Now what we're going to have to do here is think about the idea of the cost per unit may change, and therefore how are we going to record this when the costs change if we don't have specific identification, meaning I don't know exactly which unit we're talking about. These are units that I don't want to spend the time to track because they're all the same in some way. Therefore, as costs typically go up, which is typically the way costs go because of inflation, if nothing else, then how are we going to account for this? We're going to use the first in, first out method and construct it as we go. So we're starting off here on 3-1, and we're going to say that there's 100 units at $50. When we look at this worksheet, note that we have 3 columns here, or 3 major columns and then 3 columns within each. In other words, we have purchases, cost of merchandise sold, and inventory. Now, we're going to be really not dealing with the cost of merchandise sold, but keeping it there in order to compare and contrast this worksheet from one we would see if we were doing a perpetual system. The perpetual system meaning we would be recording the cost of goods sold as we go. Periodic system means that we're going to figure out the cost of goods sold at the end of the period, at the end of the month in this case. So here we're going to say that we're starting off with the ending inventory. So we're going to say just in the inventory, the ending balance here at a balance of 100 units. And we're going to say that there's a unit cost of $50. So that's what we're starting off with, $50 unit cost and the number of units. Note that the cost is going up as we make more purchases over time. We can then calculate our total here, our total really converting from a unit cost to dollar amount. So when we record something on the financial statements, we cannot say that we have 100 units. We have to say how many dollars worth of inventory we have. To do that, we're going to take the 100 units times 50. We'll do that with a formula here in cell M7. So within M7, we're going to say equals, point to that $100, and cell K7 and say times the asterisk, and then point to that $50, and if we, actually this is 100 units times $50, and once we say enter, it should calculate it at $5,000 worth of inventory. Now I typically will have another column here so that we can sum this up in case there are multiple rows, as we will see later. So all I'm going to do here is say equals of that same 5,000, that is the total, and enter. That's where we are starting at the beginning of this problem. We don't need a journal entry because that was the case before we started. If we scroll over here to the financial statement, we can see that it's already set up as that being our beginning balance number, tying out now to our worksheet at this time. So that's where we begin. We're going to keep rolling from there. Second item, I'm going to skip a line. We're going to go down here and say it's on 3-5. Says we purchased 400 units at $55. So we purchased 400 units. Now of our 3 columns, purchases, cost of goods sold, inventory, we're going to start out with the purchases column and then we're going to pull over what we need to the ending inventory. And this seems like kind of a tedious worksheet to have these 3 columns, but it really is the best way to set this up, or one of the best ways to set this up, to systematically be able to put this in place and be able to pick up all of these types of problems in the same format. So if you can just get one format down that you can put all of these types of problems into, then it'll be easier, even if that format's a little bit longer than you could do in some problems, by setting it up in that way, and then just being good at doing that and efficient at doing that, and then we can just put these numbers into place. So we've got a purchase here in the quantity column. So we said we purchased 400 units, tab. The dollar amount went up from $50, now they cost $55, so we're going to put the 55 there in D8, tab. We're going to make this cell a little bit wider so we can see it. That's $55, that's why we had a problem. And then we're going to multiply these out, and we're going to convert from units to dollars. So in E8, we're going to say equals, point to that 400 times the asterisk, point to that 55, and enter. And that'll give us our total being $22,000 worth of inventory. Now we're going to pull that over to the units column here, to our ending inventory. And I'm going to do that with 2 layers here. So we have 2 layers because we have 100 units at $50. We've got another 400 units at $55. Now instead of just putting this 400 right underneath it, I'm going to bring this down so that all of our information is at this same date line. So in order to have these 2 columns, basically the 100 units and the 400 at the 50 and 55 respectively, I'm going to just bring this column down and then bring our column from here over. So I'm just going to do that, I'm just going to say equals in K8, and that amount, the 100 right above it, in K7, and enter. And we're just going to pull that down. So we are in L8, we're just going to say equals and point to the 50 right above it, click on that, in L7 and enter or tab. This one we could say equals and point to the one above it, or we can do the multiplication one more time. We may as well do the multiplication one more time. So we're going to say equals the 100 in K8 times the 50 in L8 and enter. So there's our same 5,000. I'm not going to bring this 5,000 down because what I want, this is 5,000 total as of this date. Once we have the 2 lines done, we'll have the total of the 2 lines, the 2 rows that are currently in ending inventory at this point. So we're going to pull this amount now over to here. We could copy and paste it. I like to use formulas whenever possible, so we are in K9. I'm going to say equals and point to that $400, and in C8 tab. Then I'm going to pull over this 55, so we are in L9. I'm going to say equals. We will point to that 55 in D8 and tab. And then we could pull over that 22 or recalculate it. I would prefer to recalculate it. So we're going to say equals the 400 times that 55. So K9 times asterisk L9 and tab. So there we have that. Now we're saying that we have these 2 columns and they're all in this date line. So that's the point of bringing that first column down. Under this date line, we have ending inventory consisting of 100 units at $50 or $5,000 worth of inventory, and 400 units at $55 or $22,000 worth of inventory. We're then going to sum that up on this side so that we have one total in dollars. So in order to do that, we'll use our sum function. So we are in N9 equals SUM. Double clicking that sum function, we'll highlight the 5,000 down to the 22,000 and enter. And that gives us 27,000. So now as we go, so we can tie this out to what we're actually doing, we're going to make the journal entry for this purchase, post it to our trial balance, and see that our ending balance should tie out to this 27,000. So what we're going to say, we already have the transaction up here. It's going to be inventory is going to be debited. Inventory is a debit balance. We're going to do the same thing to it, a debit increase in it. We will assume we purchased it on account, didn't pay cash for it. Therefore, the credit goes not to cash decreasing, but to the liability increasing for. We are in R4. I'm going to say equals, and I'm just going to point to that 22,000. That's what we paid for it. There's no estimate. It would be the same under first in, first out, last in, first out, average, specific identification, all methods the same. This is not an estimate. And then I'm going to say we're going to put the negative 22 here to represent a credit. I'm going to do that with a negative of this number. So negative of R4 and enter. And there are our amounts. Then we're going to post this out and see what happens to our financial statements. So we are in V13. So it started at 5,000. That was our beginning balance. We're going to post our adjustment here. That's 22,000 to see the adjustment to the ending inventory in journal entry form and posting to the worksheet format. So we will say equals, point to this 22,000 and enter. We go from 5,000 up by 22,000 to 27,000. That then matching over here what is on our worksheet. So that's how our worksheet kind of backs up, shows the detail for the amounts in the accounts on the trial balance or financial statement. Then we're going to go to the accounts payable. Here's accounts payable there. Here it is here. We are in V14 and we're going to say equals and we're going to point to that accounts payable 22, going to increase the accounts payable. So we're just going to increase the accounts payable here. We're not going to show the payment at a later date. We'll focus on that at a later type of presentation. We're just going to always be buying the merchandise on account for purposes of this problem, focusing mainly on the inventory increase when we purchase, inventory decrease when we sell, and the related cost of goods sold when we make a sale. Or at this point, periodic system, when we do the ending calculation at the end of the period or month in this case. All right, next one. We're going to make sure to skip a line. We're skipping a line, and we want to be on the next row here, and that's going to be on 3.9. 3.9, we made a sale of 420 at $85. So we're purchasing them for $50 to $55. We're selling them for around $85 each. Now the tricky thing is here that when we are in a periodic system, we will not be recording the sale. If we were as a perpetual system, we won't be recording it on this worksheet. We will record the sales side, however, not the cost side, which is what this worksheet is showing. Therefore, this row, which we would be using in a perpetual system, won't be shown here. The only reason I have it here is just to show the difference. We're not doing this row as we go through the month. However, we will be calculating the cost of goods sold on a periodic basis, in this case at the end of each month. We will be doing the journal entry, however, so we'll go to the journal entry over here, and we'll say that if we made a sale, accounts receivable went up. We're making a sale on account, we're assuming, and the other side is going to go to revenue. Revenue went up. Now, how much did we get? We've got 420 units we sold at $85. So we're going to scroll over here. I'm going to do that little calculation. We'll say equals 400 times 85. So 4 equals 400 asterisk times 85. So that's 34,000. Let's just double check that. 420, I should say. 400. I'm going to double click on that. We'll change this to 420. So it's equals 420 times 85. 420, you could put it in the calculator too, but I like using the formulas here, and enter. 35,700 is what people owe us for the inventory we sold and have not yet received payment for. We're going to have a credit to sales of the same amount. I want to put a negative number, therefore we're going to say negative of that number and enter. So there's the credit, there's the debit. Now we're going to post that out. So we're going to go over here to accounts receivable here. Here's accounts receivable there. We are in cell V12. Within V12, we will say equals, point to that 35,700, bring in the 44,900 up by 35,700 to 80,600. Then we'll post the revenue income at 35,007 credit. That will be down here in V16, so within V16, we will say equals, point to that 35,700, and that will increase net income. Notice we're at a loss right now. We're just going to increase, if we hit enter, it'll increase net income. Now the revenue is greater than the expenses. Now the next step that we're not going to do, that we would do on a perpetual system, is record the related cost of goods sold and the deduction or reduction in inventory. Not going to do that here because I'm assuming the reason we're not using a periodic system is our system isn't sophisticated enough to do that. We're just going to record the sales as we go. We're not going to worry about the cost of goods sold because that's a little bit more difficult for us to calculate as we go. And then we'll account for it at the end of the time period, in this case, the end of the month. So note that our net income is not very accurate right now because all we have is the revenue. We don't have the cost of goods sold. So it's very inaccurate. Cost of goods sold being usually the largest expense for a company who sells or which sells merchandise. So let's go back to our problem over here. So nothing happened on the 9th in terms of this worksheet calculating the inventory. Notice our ending inventory is still at 27,000 and it's at 27 here. That's wrong because we sold some of it, but again, we're not going to make it correct until the end of the period on a periodic basis. Next, we're going to go to 318 and we're going to say that we had a purchase of 120 units at $60. So that's going to be in the purchasing column first. So we're going to put it in the purchasing column first. We're going to say that we had 120 units at $60. Notice the prices are rising, starting at 50, went up to 55, now at 60. So that's going to be typical in a typical period. Usually prices are going to go up. And then we're going to multiply this out, the 120 times the 60. We will use a formula to do so, saying equals, pointing to the 120 in C11, times pointing to the 60 in D11, and enter. So there's the 7,200. That's the increase or the purchases that we have. No estimate here. Doesn't matter if it's FIFO, LIFO, average, specific identification. It will always be the same. 7,200 is what it is. That's what we will pay. That's not where the estimate will be taking place. Then we're going to bring that information over to the ending inventory here. Now, again, we got 3 layers now, so we're going to have to bring the layers down. We want to bring these layers down and then add the new layer, giving us 3 layers. So to do that, we're going to be here. I'm going to bring the 100 down and then the 400. So I'm going to say I'm in cell K11 equals, pointing to that 100 and tab. And then we are in cell L11 equals, just pointing to that 50 to bring this row down and tab. We could then do the same to bring down this 5,000. I would rather recalculate, however, so that's what we will do. I'm going to say equals, at least I will do. You could bring it down. It's going to say this 100 times the 50 and enter. So there's the same 5,000. There's this row we just brought down here, so it's under our new date line. We're going to do the same thing for the 400 row, not this amount, just these 3 numbers, so that we can then sum up after we add the new row, this row, the purchase we just made. So in cell K12, we're going to say this equals that 400 in K9 tab. Within cell L12, we're going to say this equals and point to that 55 in L9 tab. We could do the same thing and pull down this 22,000, but we're going to use a formula rather than do that. Equals, and we're going to point to this 400 in K12 times, or asterisk, which is times the 55 in L12, and enter. So this is where we were at last time. If we sum those up, that's our 27. Now we're just going to pull this over to our ending inventory. Going to do that with a formula. In K13, we're going to say this equals, point to that 120 in C11 tab. Within L13, we're going to say equals and point to that 60 in D11 tab. We could do the same to pull down this 7,002, or we can do the multiplication, and I like doing the multiplication, so we're going to say this equals the 120 times the 60, so equals K13 times L13 tab. Now we're just going to sum these up. We're going to add these columns up. We have 100 units at $50, 400 units at $55, and 120 units at $60. So within N13, we're going to say equals SUM. Double click that sum function, highlight the 5,000 down to the 7,002. That will give us then 34,200. We'll now post this to our, or we'll make the journal entry, which we will then post. Once done, we will see the effect on our trial balance, which should then match in ending inventory to the 34,200. So we got 7,200. 7,200 was the purchase. And so we're in March 18th, 7,200. And note that this amount, the reason it's here is just to show that this is what we're skipping. This is what we're not doing in a periodic system, which we would do in a perpetual system. So we're going to say inventory's going up. We made another purchase. Inventory's here, inventory's there. We're going to increase it with a debit, 7,200. The other side, we're going to assume we purchased it on account and therefore credit the accounts payable. We'll do that in S14 by saying negative of that number and enter. And that will be our transaction once again. We're going to post this to our worksheet over here. Scroll back over just a bit. So we're going to say inventory is here, inventory is there. We're going to post it to the middle column. We're at the 27,000. That's where we were at before. Something's in V13, therefore we're going to double click on it, go to the end of it, say plus, point to that 7,200, bringing that 27,000 up by 7,200 to 34,200. Here's the accounts payable liability. Here's the accounts payable. We will be posting it here in V14. Something's in it. Therefore, double click on it, go to the end of it, plus, point to that 7,200, increase in the 34,150 by the 7,200 to 41,350, back in balance with the green zeros. No effect on net income from this transaction. Net income will be affected by the inventory when we sell it, which we won't be recording the cost of goods sold side of the sale until, because of the periodic system, the end of the period, end of the month in this case. Therefore, the ending inventory is 34,200, which once again, note that that's not actually right because we're not recording the fall in inventory when we make the sale. But that's when we will do that at the end of the time period, but that's what we have right now, which should be matching our worksheet at this point, and there it is, the 34,200. Again, not entirely correct because we haven't been using this column. We haven't been recording the decrease in inventory as we sell the inventory or the related cost of goods sold. Next item, we're going to be on this row. We want to make sure that we are skipping enough lines. We're down here on B14. B14 on 325 says we made another purchase of 200 units at $62. So once again, we'll be in the purchases area, same type of transaction. We'll go a little bit faster, therefore. So we're in C14. We're going to say 200 units, tab. We purchased them for $62. Note the price is going up once again, $62. And then we're going to multiply this out. So we're going to say equals in E14. We're going to point to the 200 in C14 times asterisk the 62 in D14. That gives us the total of 12,400. Now we're going to take these layers and just put them all down here again. Not the total here actually, just these three layers. I want them all under this date line. And then we're going to pull this one under that to give us 4 layers, all having different prices for which we purchased the same types of units of inventory because of increasing prices over time. So in order to do that, within K14, we're going to say equals, point to the 100 in K11 tab, and then in L14, we're going to say equals, and point to the 50 in L11 tab. And then we could do the same for the 5,000 or do the math, and we love doing the math, so we're going to do the math here. We're going to say equals the 100 in K14 times the 50 in L14 and enter. Same thing, we're going to pull this one down here. So we've got the 100 that we just brought down here. Now we're just going to bring down the 400 so it's all under this date line. Seems a bit repetitive, but it's the way it works here. Best way to do it. So we're going to in K15 equals the 400 in K12 tab. We're in L15 equals, we're going to say that 55 in L12 and tab. And then we could do the same for the 22 or do the math. We will do the math. Equals, pointing to that 400 in K15 times, pointing to that 55 in L15. Enter. We've brought this down now. Now we'll do the same for this row. So the next row we will bring down, the final row of this column, before we bring down the new activity. So in K16, we're going to say this equals that 120, tab. Within L16, we're going to say this equals that 60, tab. We could do the same for that 720, 7002, but Excel, anticipating what we were going to do, actually did the calculation for us, multiplying the 120 times the 60. Okay, so now we're going to sum these up, just these here, to give us our total of the, actually we're not going to sum these up now, we're going to add the new row, this row here. So the new activity we had is going to be here, we're going to say in K17 equals, pointing to that 200, in C14, tab, and then in L17 we're going to say that equals, pointing to the 62 in D14 and tab, and then once again it does the math for us, multiplying the 200 times the 62, giving us that 12,004, same number as here. Now we can sum up the four layers. So note what we have here. 100 units at $50, 400 units at $55, 120 units at $60, 200 units at $62. Notice that they're all the same type of units. If we're selling widgets, they're the same widget. It's just that we bought them at different times, and because of rising prices, which is a typical scenario over time, the prices have increased for these same things that we have been purchasing. So we're going to then sum these up. So we're going to say equals SUM, and just double click the sum function, and then we're going to highlight from that 5,000 down to the 12,004. You can move this out of the way if it's in the way too. Well, anyways, and then enter. Okay, so there we have that for 46,600. We're then going to make the journal entry for this purchase, this 200 units. So the 12,400 is what we purchased. Remember, purchases same under LIFO, FIFO, average cost, on perpetual or a periodic system. Always, there's no estimate involved here, in other words. And so we're going to scroll back over here, 12,400. 12,400. We're going to put the debit and the credit. So I know I did that a bit quickly. So note what we're doing here. The inventory has a debit balance, and we need to increase it because we purchased more of it. So we're going to debit 12,400 in inventory. The accounts payable is going to be the other side of the transaction. It has a liability. It's going up. The bad thing's going up because we owe more money. Therefore, we're going to increase it with a credit. So same type of journal entry. We're going to post that out to our worksheet now. Here's the inventory here. Here it is on our trial balance. We want to go to the middle column in V13. Something's in it. Therefore, we will double click on it, go to the end of it, and say plus, and then point to that 12,400, bringing the balance up to 46,600. Should look familiar. And then we're going to go to this accounts payable. Here's the accounts payable in V14 that we want to post to. Something's in it. Therefore, we will click on it, go to the end of it, say plus, and then point to that 12,400 and enter. So we're back in balance here. No effect on net income from this transaction. It's a purchase, not a sale. And the inventory that we purchase will be an expense, however, not expensed until we consume it to use it to make revenue. That's when we sell it, and cost of goods sold will be the item. This won't happen, however, in a periodic system until the end of the period, in this case, the end of the month. Note that this 46,600 in inventory matches the 46,600 we have on our worksheet, as it should. Also note that that amount isn't entirely correct because we haven't calculated the related decreases during the sales. And that will happen at the end of the time period with a physical count. Next thing that we have here on the worksheet is 329. That's going to be a sale, 160 units at $95. So again, this is kind of a trick question in terms of this worksheet, in that we don't do anything for this worksheet because we're leaving the whole cost of goods sold worksheet blank. We're not, this worksheet only records the cost, not the sales price. And note that this $95 is the sales price. That's what we sell it for. This worksheet is tracking not what we sell it for, but what we purchased it for. And so it's not going to be here. What we will have the recording of the journal entry over here. It's going to be 160 units at 95. So we're here. We're going to say this equals 160 times 95. Just let me double check if that's correct, and then we'll be back here. So 160 at 95. Memory's getting a little short there. So we're going to say it's 160 units times asterisk $95 per unit, and enter. So then we want a credit for the same amount. I'm going to do that with a negative of that number. So note that this is the same type of journal entry that we would have if we were just a service company and we weren't selling inventory. Accounts receivable going up for the service we provided for which we have not received payment yet, and the revenue going up for those services. We're not recording the second component. It's only here to show what the difference is between the perpetual and periodic systems. If we post this, then we're going to post the accounts receivable. Here it is here. There it is there. We want to post to the middle column, V12, double clicking on it, going to the end of it. We're going to say plus, and then point to that 15,200, bringing the 80,600 up by 15,200 to 95,800. Then the revenue side, here's the revenue here. We're going to be posting to V16 by double clicking on it, going to the end of it, plus, and pointing to that 15,200, bringing the 35,700 up by 15,200, and then we'll also put us back in balance, and of course it'll bring up net income. So if we say enter, we say we're back in balance, net income is increased, the credits over the debits, the credits going up, revenue being a credit, increasing net income, revenue minus expenses, to this 40,180. So again, note how deceiving that is, however, because we're totally missing the cost of goods sold. There's nothing in the cost of goods sold. Our biggest expense typically when we are a merchandising company, that's the cost of the things that are helping us to generate this 50,900. So now that we're done here, we're going to have to figure out what that cost of goods sold is. Here's our inventory at this point. Here's our inventory here. We know it's not correct, however, because we haven't recorded the sales of inventory, so we know that's too high. So now we're going to have to do a physical count. We're going to say, hey, we did a physical count at the end of the time period. We found then that there are only 240 units left at the end of the time period, as opposed to what we're showing here. If we sum this up, we get to 820 units. So we don't have 820 units. We only have 240 units due to the sale of 420 units and the sale of 160 units. So to demonstrate that more fully, we're going to see the cost of goods sold calculation. We'll perform the cost of goods sold calculation, and then we will make an adjustment to fix the ending inventory and to record the related cost of goods sold. So if we go to cost of goods sold, now we can represent the cost of goods sold formula two different ways. One in units, two in dollars. And it's useful and helpful and pretty much mandatory actually to know the two methods and not get them confused, because it's easy to kind of get them confused. We can do them either way. We can think of it's just a conversion method between units and then to dollars. So units are typically easier to think about because when we actually see the inventory, we see them in units. We can count units, and it's pretty straightforward, the calculation. Then we started off. Then if we look at the units, I'm going to scroll back over with this 100 units. We started off with this 100 units here. So we're going to scroll back over here. We're going to put that, I'm over here in AB6. So in AB6, we're going to say that we had 100 units that we started off with. And then we made purchases. So I'm going to scroll back over and try to figure out how many purchases we made. If we add these up, we purchased 400 units, then 120 units, and then 200 units, for a total of 720 units. So we purchased 720 units. Scrolling back over here, we're in AB7. We're going to put that 720. So in AB7, 720. Then we will sum these or add these up, the 100 plus the 720, using the sum function. We're going to say equals SUM, double click the sum function, highlight the 100 and the 720, giving us 820. So that's going to be what we had available for sale. So obviously we sold some of those as we go, but that's what we could have sold at any given time throughout the entire month. That's how much inventory we had that went through our inventory system within that entire month. So then we're going to figure out the ending inventory. How would we do that? With a physical count. So we're going to say we physically counted the inventory and we saw that there was only 240 units left. So we're going to say, all right, so there's 240, ending inventory is 240. We had 820 we could have sold. We only have 240 left. Therefore, the difference between what we could have sold during the month and what we have left is what we sold, termed cost of goods sold. So within AB10, we will say equals, point to that 820, minus, point to that 240, and enter. That gives us the 580. Now note that we could convert all of these straight across to the dollar amounts if the dollar amounts were all the same, meaning if all the units cost the same amount through the entire time period. However, they didn't. The cost went up over the time period. That's why we need a problem. That's why we have this problem and need the assumption of first in, first out. So we'll now do the same thing in terms of dollars. So the starting point will be pretty much the same. If we scroll back over here, we had 100 units at $50 or $5,000 worth of inventory. So if we scroll back over, our beginning inventory then was $5,000. So in AC6, we're going to say $5,000. And then we had purchases here. Again, the purchases are what they are. I'm going to scroll back over. This is what we purchased them for. There's no estimate in the purchase. So all of these purchases, it is what it is. It would be the same under first in, first out, last in, first out, average, or specific identification. In our case, in our problem, that purchase total for the time period this month of 41,600. So we're going to scroll back over here. We've got in AC7, 41,600. We're going to sum those up then. If we purchased 41,600, started with 5,000. If we sum those up, that'll be the total we had available for sale throughout the entire period, the month. So in AC8, we're going to say equals SUM. Double click that sum function, highlighting the 5,000 and the 41,600, or AC6 colon AC7, and enter. That gives us the 46,600. And then we have the tricky part here. We have the fact that we counted the ending inventory. Now we have to take into account our first in, first out, LIFO assumption that we have here. So if there's only 240 units left, the question is which of those 240 units do we have? So if we scroll back over here, we're going to say that here's all the layers that we have, and we're saying that there's only 240 left, so which did we sell? Now there's a couple different ways that we can do this. We can try to think of, what is left over here, and notice that if we're talking about very small problems, they'll often only give you one side of this and try to figure this out, but they're going to be mutually, if you figure one side out, then the other side has to mirror it. So in other words, if I figure out what's left in ending inventory, the flip side of that must have been what we then sold. So in our case, I'm going to think about the cost of goods sold. We're going to now populate this column here and calculate just for this one time purchase, or the one period at the end of the time period, how much it is that we have sold for the ending calculation. So we could go over here and say that the cost of goods sold as we counted in units was 820 minus the 240 ending inventory. We sold then 580 units. That's how many units we sold. So we could think about how many units we sold then to populate this column. So if we had these units, we're going to sell, I'm going to write that down, 580 here. If we sold, this layers of units is what we're working with. We sold the first ones first. So we sold these first, and then these, and then these. That's the assumption we made. And note it's just an assumption. We hope that that's probably the case if we're in this first in, first out. But we don't know that that's the case. We could have sold any of these widgets. They're all the same. So we're going to say we assume that we sold this 100 first. So we're going to assume we sold these 100 and they were at 50. So I'm going to say equals in H18 that 50 tab. And we're going to multiply this out then. We're going to say this equals that 50 times, that 100 in G18 times the 50 in H18 and enter. So that 5,000, we brought that down. We assume we sold this 400, so because we have to get to 580, so that would be 500. So we're going to assume we sold this 400. So in G9, I'm going to say that 400 tab. And then we're going to say in H19 equals, pointing to that 55 and tab. And then we'll multiply this out. So in H or in I19, again, we could pull this over, but I'm going to multiply it, equals the 400 times asterisk. And so G19 times the 55 in H19 and enter. And then of this 120 units, we only need, what, 80 more? So because we got to get to 580. So we're at 500 now, and we only need another 80. One way to do that in Excel, you might want to just use a formula to do that. You could say equals what we need this to be after we sum this up, 580, minus what we have already done, the 500, or minus the sum of what we've already done, these two. So 580 minus 500 minus the sum of those two should give us the 80. And those are going to be at in H20 equal to, pointing to the $60 tab. Then we'll multiply that out. In I20, we will say this equals 80 times the 60, or G20 times H20 and enter. So that gives us 4,800. So if we sum those up, if we add those, it's going to be 31,800. That's our cost of goods sold over this entire time period. Now, we also need to know the flip side of that, and which is what's left in ending inventory. What do we still have here? We know that these are gone. Those have been wiped out. We know that these are gone. Those have been wiped out by here. So we have the 120 left. So I'm going to scroll down here, and I'm going to say we have equals the 120 units, K16, minus the 80 units that we consumed, or that we consumed means, and we sold. We still have 40 units left of that row. So these rows are gone. We have 40 units left of this row at $60. So in L18, we're going to say this equals that $60 tab. And then in M18, we'll multiply those out. This equals that 40 in K18 times that 60 in L18 and enter. So we have $2,400 worth of this row left. And the 200 row we didn't spend at all. So we're going to say this is going to be pulling down. This equals the 200 tab at 62 equals the 62 in L17 tab. And then we'll multiply that out. So in M19, we're going to say that equals the 200 times the 62, or K19 times L19 and enter. Then we'll sum this up. So in N19, we're just going to add these two up. So we'll say equals SUM, double click the sum function and add the 2004 plus the 12,004, giving us 14,800. So that's the two components. This is what we sold now. This is what we have left. This last piece is the periodic system, the key to the periodic system, and the fact that we're not recording anything in this cost column during the time period, only at the end of the time period, getting to this point at the end of the time. You can also note that the periodic system and perpetual system can end up with different numbers at the end, even at the end of the month. So at the end of the month, it could be different just because of where the layers were at when we made the sales. So it's not always different, but it could be different. So keep that in mind if you see a question on that. The periodic system and the perpetual system, will they be the same as of the end of the month after the month has been adjusted for in the periodic system? They could still differ because of when the sales are happening. Okay, so now we're going to do that last journal entry, and now we're actually going to do basically the adjusting entry. So we're going to record this cost of goods sold and the inventory, not related to this particular sale, however, but related to all sales that happened during this time period. So that would be, in this case, the two sales that happened. So we're going to say that we're going to pick up the sum of these columns, which is 31,800. So we could do that with a formula. I could say in cell R22 equals SUM, and double click the sum, of these numbers here and enter. That gives us 31,800. Then we're going to put the credit side into inventory negative of that 31,800. So let's take a look at that journal entry one more time a little bit more closely over here. If we scroll back over here, we're recording the second component to the sales. Now note, when we typically see a sales in a perpetual system, we would have the first half of it, the revenue side of it happening, accounts receivable going up and revenue going up, and then the second component happening, inventory going down, us giving away inventory in order to generate revenue, and the related cost of goods sold, the related expense going up, bringing net income down, the net between revenue and cost of goods sold being the net income effect of the transaction. This is what we're not posting the whole time, and we're posting that component of it at the end this time. So we're doing the same thing here. We're basically recording the second half of it, meaning the inventory decreasing. Inventory has a debit balance. We need to make it go down by doing the opposite thing to it, in this case a credit, and recording the related cost of goods sold being an expense account, expenses going up in the debit direction, and therefore we do the same thing to it to make it go up in the debit direction, another debit. So we're going to post this out then. So here's the cost of goods sold here on our journal entry. There it is on our trial balance. We're going to post it here in V17, the entries column, by saying equals and point to that 31,800, bringing the balance up from 0 by 31,800 to 31,800. This will put us out of balance and it'll bring net income down. So now our net income note is much more reasonable. Before we recorded that, the net income was way out of whack because this is a huge expense in relation to all other expenses. So really, we can't rely on our income statement until we record the periodic adjustment for the inventory and the cost of goods sold at the end of the period if using a periodic system. If we're using a perpetual system, we can have a bit more faith in the numbers, although there could be a change in terms of inventory shrinkage or loss or damage or something like that. We're going to record the other side now, the inventory side. So here's inventory here. Here's inventory on the trial balance. We're going to record it to V13, double clicking on it, going to the end of it, saying plus, pointing to that credit of 31,800, bringing the balance down to 14,800, that putting us back in balance. This 14,800 now then should be recorded what's on our worksheet. There's the 14,800 on the worksheet. So this worksheet, we want to always keep in mind that it's really there to support the numbers that we are recording on the financial statements, the numbers we're recording on the trial balance. Then the cost of goods sold here is also the cost of goods sold, the 31,800, of course, that we have on our worksheet here, the 31,800. So that's going to be the LIFO on a periodic system. For more accounting information and accounting courses, visit our website at accountinginstruction.info.